Good morning, dear learners, and welcome you all to the next lecture of my course on financial literacy. I, Dr. Vandana Sonkar, Assistant Professor, Faculty of Commerce, Banaras Hindu University, welcome you all to the lecture number 41 of module number 9, that is income tax filing, and we'll be going to discuss in this particular lecture about the income tax return filing and e-filing. In the previous lectures, in the module number 8, we had discussed about the various aspects related with the personal taxation, and we had discussed in those lectures how and what is the procedure that an individual needs to follow for the purpose of calculating their tax liability and pay their total tax to the different type of authorities. Now, in this particular session, we'll be going to understand about the income tax filing and its purpose, the time limit that is given to the different types of assessee for the purpose of filing the return. We'll be also going to know about the types of ITR forms that needs to be filled up by the different types of assessee and the returns for the special assessees, and we'll be going to discuss the concept of e-filing, its benefit, and the various steps that one needs to follow in case of e-filing their return with the help of the different kind of portals. Here we'll be also going to discuss some of the common mistakes that one need to avoid at the time of e-filing of their returns. Now, in the previous lectures, we had also discussed how we can calculate our total taxable income, and by applying the various percentages according to the slab rate tax system as well as the various tax rates in case of the income from house property, income from business and profession and gain, and the income from short-term and long-term capital gains and income from other sources. In each case, we need to identify what are the sources of income, and then after adding all the income, we deduct the exemptions and deduction to find out the total taxable income, and then we apply the tax rate for the purpose of calculating the taxes. Now, the question comes, how these taxes are deposited to the various taxation authorities and government authorities in our nation. So basically, for the purpose of collecting the revenue from the citizens of the nation, our Government of India and Income Tax Act 1961 takes various types of ways with the help of which they can collect the taxes, such as they can collect the taxes from TCS, that means tax collection at source, in which in the prices of commodities and products, the tax is paid by the ultimate consumer to the producer of the products, and then producer finally submits this amount of tax to the taxation authority. Then comes tax deducted at source, that is TDS. TDS is a system with the help of which, before giving revenue in the hands of the receiver of the earner, the tax is deducted from the employer or the payer for the purpose of submitting it to the government authorities. Then comes the advance payment of taxes. Under this system, the various types of assessee, they on the basis of their estimated income submits the taxes to the government authority into 4 different quarters in an annual period for the purpose of avoiding excess financial burden of the overall tax payment in a financial year. So in the month of June, in the month of September, then December, and finally in the month of March, they submit certain percentages of their taxes to the government authority. Now, with the help of collecting the sources from the TCS, TDS or advance payment of taxes, the government, before giving the revenue in the hands of the earners of the money, collects the taxes from all these sources. With the help of income tax return filing, we can very easily clarify what sources of income we have had in the previous year, as well as we can also claim the returns that we need to take from the government authorities by mentioning how much tax we have deposited by TCS, TDS or advance payment of taxes. So basically, income tax return filing is the process under the tax laws where a person must submit the details of their income, deductions and other liabilities, and after that your total tax liability is calculated with the help of the available tax rate system, and then the TDS or the advance payment of taxes, whatever you have deposited, that is deducted, and actual tax paid is taken by the government authority, and the excess amount of the tax deposited by you is returned to you by applying the percentage of interest also. So who should file an income return? So every company or every firm in all cases must file their income tax return. That means whether they are having profits or losses, it doesn't matter, they all need to file their return. Then any other person whose total income exceeds the maximum amount that is not chargeable to income taxes, they also need to file the return. So with the help of filing the return, they can declare the total earnings, that means the total income that they have from the different heads of income, as well as they also can claim the various types of deductions, and they can also claim the various expenditures and exemptions that they have under the Income Tax Act, and finally they can pay the actual tax burden that they need to pay. Now let us know the important benefits of filing our return on time to the government authority. The various types of benefits of the income tax return filing are easy approval of loans. That means when you file return to the income tax authority at the due time, then it always makes you credible and reliable, and your credibility will be more for the banks and the other authorities. In such cases, your loan applications will be approved on the basis of the records that can be rechecked or re-verified with the help of the income tax filing portal. It is a responsibility towards the nation. So every individual or every SSC, every type of company, they must file the return to declare their actual tax liability and to pay the actual amount of taxes that they need to pay to the government authority so as to contribute into the welfare of the nation. It also helps in avoiding penalties and notices in cases when the government will not be capable of collecting the revenue from the TCS, TDS or advance payment of taxes, and if you will not file your return at the due time, in such cases penalties or notices may be issued to the assessee for the purpose of collecting taxes from them. So they can face many types of penalties under the Income Tax Act 1961 for not paying their taxes at time and not filing their return at the due times. They also claim the TDS refunds with the help of the return filing. So as we have discussed, it is a platform from where you can declare your total income as well as you can ask for the deduction, you can claim your exemption, and if you have deposited any kind of taxes at source, then that tax deducted at source will also be deducted for the purpose of calculating your actual tax liability in the last quarter of the year. So you can claim your TDS refunds with the help of the income tax return filing, and this return will help you to increase your savings. It also helps you in carry forward the losses. So we have said in the previous slide that all the companies, firms, they need to pay the ITR returns at their due times. It doesn't matter whatever in their income is. It may be possible that they are suffering losses in the current year, but they need to file the return. This will help them to carry forward their losses. Their business losses can be set off with the profit of upcoming years if they file return at the due time. So carry forward of losses is only allowed if you file your return return at the due times to the taxation authority. Then the last benefit of the return filing it helps you in quick visa approval. So if you are traveling to the foreign countries and you have applied for the visa approvals, then and you are a responsible citizen and you are filing the returns at times, then your visa approvals may be also convenient for you. So these are the various benefits of filing the income tax return. Now let us see the various objectives why one should file their return. So the various objectives of filing the return are: number one, for reporting the income. The income tax which is deducted from your income by your employer or whatever advance taxes you pay, that is done on the basis of estimated income of the financial year, and in the last quarter of the year, on the basis of estimated income, it may be higher than the actual income also, it may be lower than the actual income also. The total taxes is calculated on the estimated income only. So to ascertain the actual tax burden that needs to be paid by the assessee, you need to declare your actual income. So that can be done with the help of return filing. So it is a chance to you where you can report your actual income to the government authorities for calculating your justified tax liability. Then you can also claim deductions with the help of filing the return. To claim the deduction, one must file their return to show the income limit and the amount of deduction that is allowed to them. So you need to also have an option of claiming the deduction, so that can be done with the help of filing of return. Then for paying taxes, so the primary purpose of the government authority and the income tax authority for the process of filing of return is to collect taxes from their citizens. So the primary purpose of filing an income tax return is to calculate the actual tax and pay it to the authority on the income of the assessee that falls within the taxable income slab according to the financial budget of the country. So these are the various objectives of the ITR filing. Now let us understand the time limit for filing the ITR. For different type of assessee, there are different time limits in the Income Tax Act for the purpose of ITR filing. For example, for the companies, for the person whose accounts are subject to audit, or for the partners whose accounts are audited, the time limit for filing the return is 31st October of the assessment year of any financial year. Whereas those assessees who are required to report under section 92E, for them the time limit is 30th November, and for the other assessees who are not covered under the both of the above category, for them 31st July of the assessment year of the financial year is the final due date for filing the return of their taxes. Now let us understand the income tax return for a small business, that is the sources. So for the small business, for a sole proprietorship business or the assessee, the various incomes for which you can file the return may be the income from salary or pension. If you are having any source of income that may be in the form of salary or in the form of pension, then you can file the returns. Income from other sources such as interest, family pension, dividend, etc. This can also be counted as a source of income for filing the return. Then for small businesses, there may be income from business, profession computed on presumptive basis under section 44AD, 44ADA and 44AE. Income from one house property is also included for the purpose of filing of return, and agricultural income up to rupees 5,000 may also be included for the purpose of filing the return. So if you are having any of these income or all of these income and this comes under the taxable limit according to the tax slab rate, then you need to file the return of your taxes. Now let us understand what are the different type of forms that are available for filing the returns. So the first form is known as the ITR1, that is also known as the Sahaj form. So these forms are available on the website of the income tax authorities. So who can file their return with the help of ITR1? So any resident individual whose total income does not exceed 50 lakh rupees and who has an income under the head of salary, one house property and income from other sources such as interest, income or family pension, these types of assessee can file their income tax return with the help of ITR1, that is the Sahaj. Then next one is the ITR2. Under ITR2, the individuals and HUF can file their returns. In this case, the various sources of income for the individuals or HUF may be salary, house property income from more than one houses, then other sources income, capital gains may be of short-term nature or long-term nature, individuals, those who are directors in company or hold investment in unlisted equity share and having an agricultural income of more than 5,000 rupees, these all the categories of assessee may file their return with the help of ITR2. Then comes the ITR3. Under ITR3, those individuals or HUF who are having income from profits and gains from business and profession can file their return with the help of the ITR3. So they may have income from business, may have professional income. For example, they may be practicing as a doctor or a CA or a freelancer. So if from all these sources they are having any income, they can file return under the ITR3. Then income as a partner in a firm, income from speculative or non-speculative businesses, and they need to also disclose some of the important documentary evidences for filing the returns such as balance sheet, profit and loss and a statement of assets and liabilities for the purpose of filing their return and claiming their deductions. So these ITR3 may be ideal for freelancers, consultants, small business owners and professionals for filing their return. Next ITR form is ITR4 Sugam, which is for the presumptive income scheme. So under the presumptive income scheme, some sections have been mentioned in the IT Act of our country, such as section 44 ADA, 44 AD and 44 AE. These sections have been discussed for the business form of organization. So any resident individual who is running a sole proprietorship business, HUF, firms who are working other than LLPs, that is limited liability partnership, and their total income does not exceed rupees 50 lakh rupees, that means they have presumptive income under the sections of 44 ADA, 44 AD or 44 AE, they all can file their return from ITR4, that is Sugam. So for section 44 AD is for businesses, 44 ADA is for profession and 44 AE is for transport business. The income limit as per the section of the 44 AD, ADA and AE is up to 50 lakh rupees for the professional and 2 crores rupees for the businesses. These type of ITR forms are basically suitable for small traders, professionals like doctors, architects, etc. So with the help of ITR4, the different type of assessee who have presumptive income under these sections, they can file their return. Then comes the ITR5. ITR5 is for the partnership firm and it also includes the limited liability partnership, artificial judicial persons such as the municipal corporation of a city, bodies of individuals, local authorities, etc. So all these different kind of institutions or partnership firm, they can take the help of ITR5 for the purpose of filing their return. Next ITR form is ITR6. The ITR6 is for companies except those who are claiming exemptions. So under the special economic zones or under any other particular section of the Income Tax Act, if any business or any company form of organization is claiming for exemption, then they cannot file their return with the help of ITR 6. All other companies, those required to file under section 139(4)(a) or 139(4)(d), they need to file the return with the help of ITR 6. So all the companies that are registered under the Companies Act 2013 and other than those who are claiming the exemption under section 11, that is the charitable or religious trust, they can file their return with the ITR 6. Electronically, these types of returns are filed by the company. So electronically with the digital signature, they can file their return, and it is mainly suitable for private limited companies, public companies, those who are having any source of revenue of the business income. So for them, the ITR 6 is suitable. Then comes the ITR 5. This is an ITR 5 is basically an acknowledgement of the ITR that is issued after the successful submission of the income tax return on the portal. So if any of the assessee successfully completes the process of filing the return, they get the acknowledgement in the form of ITR 5 from the income tax portal after filing of the return. Then comes the ITR 7. The ITR 7 is for trust, political parties and NGOs. So all the persons, they may work in the form of companies also who are working in a form of trust, political parties or NGOs. They can file their return under the section 139(4)(a) as a charitable or religious trust, 139(4)(b) for political parties, 139(4)(c) for research institutions, universities, etc., and 139(4)(d) for educational institutions. So all such type of organization can opt for ITR 7. These type of organization also file their return electronically with or without their digital signature, and it is mainly suitable for NGOs, educational trusts, religious bodies, etc. for the purpose of filing their return. Now, for whom there is a provision of compulsory filing of return, let us understand that. In this case, we had discussed in the first or second slide that for the companies, for the business form of organization, the filing of return is compulsory for the purpose of claiming the carry forward of their losses, whereas for individuals, if they are having more income than the minimum exempted limit under the slab rate tax system, they need to file the return. And SSE who is not coming into the two categories, they need not to file any return to the income tax authority. Whereas there are some cases where compulsory filing of return is given. So let us understand which are the cases where it is mandatory for an SSE to file the return. So if you have deposited over 1 crore rupees in one or more current accounts that is maintained with any banking company or any cooperative company, then you need to submit your returns to the authorities at due time. So it is mandatory in cases when you have an amount of current account balance of rupees minimum 1 crore. Then if you have incurred any expenditure exceeding 2 lakh on travel for a foreign country, or you have paid the expenditure for someone else to travel abroad, then also you need to file the income tax return. So for self or for other, if you have paid any expenditure up to rupees 2 lakh for traveling to a foreign country, then also it is mandatory for you to file the return. After that, if you have incurred 1 lakh rupees on electricity consumption in your country and you are not filing a return, then also this is the case of mandatory filing of the return. That means if a person is consuming an electricity of rupees 1 lakh per year, then this means that they must be having some source of income, and that is why income tax authority makes it mandatory for them to file the return. So these are the cases when it is mandatory to file the return for an SSE in a financial year. After that, if you have a business and the sales and turnover, or you can say the gross receipt of the business is exceeding 60 lakh rupees, then also you need to file the return. If you are a professional and your professional revenue exceeds rupees 10 lakh, then also you need to file the return. And if you have an aggregate TDS and TCS of rupees 25,000 or more, in case of the senior citizen the limit will be 50,000 rupees, then also it is mandatory for you to file the return. So suppose that in case of business, if you are having a receipt of 60 lakh, then also you need to file the return whether there is a profit or whether there is a loss to the business organization. You cannot say that we are having losses, so we will not file the return. If you are having a gross sales of rupees 60 lakhs rupees, then you must need to file the return. Similarly, in case of professionals also, if you earn 10 lakh rupees as your professional income, then also you need to file the return. So these are the other cases where it is mandatory to file the return to the taxation authorities. Now, there are some special categories of assessees that have been discussed under the section 139 that we had discussed in the previous slide also. So, the returns of the special assessees are filed under section 139 4A for charitable trust, under section 139 4B for political parties, 139 4C for scientific research association for conducting R&D, for under section 139 4D for the income of universities, section 139 4E for the business trust, and 139 4F for the investment fund. So these are some special assessee for whom separate sections have been prepared for the purpose of filing of return. Now, the next part of the discussion is based on the e-filing and what is the procedure of e-filing of the return. So, basically in case of the e-filing, you need not to file the return in a paper mode. That means electronically with the help of a digital platform and internet connection, you can file your return from anywhere at any time. So, basically here the filing of return will be done in a digital mode with the help of the ITR platform. By filing electronically, we means downloading the ITR form or filing it directly on the income tax department website. So, instead of filing a paper return, electronic return with the help of the digital signature is filed with the help of downloading the ITR form from the income tax department website. So, paper return is only allowed for the super senior citizen, those who are filing their return with the help of ITR form 1 Sahaj or ITR 4 Sugam. In otherwise cases, it is necessary that you need to file the return with the help of using the digital platforms. Now, benefits of e-filing are, it is convenient, so you can file your return anytime from anywhere, whether you are at your office or at your home, on a vacation, from anywhere you can file your return with the help of digital platform. It is time saving, it is faster than the traditional filing process, as in the traditional filing process you need to download the form, print the form, you need to prepare the various documentary evidences, and then you need to post it to the income tax authorities. Whereas with the help of a single click of the mouse, you can submit your ITR form with the help of the digital platform. It also reduces your paperwork. Minimal physical documents are required in case of the ITR filing in the e-filing mode. Then it is secure also. Enhanced protection with encrypted system is provided to the assessee at the time of e-filing of their return with the help of the income tax website. Now, the process of income tax filing with the help of e-filing is, first you need to register yourself on an ITR portal. After that, you need to select the relevant ITR form for you. So, we had discussed the different types of ITR form, ITR 1, 2, 3, 4, 5 and 7. So, with the help of those different categories of the form under which the different type of assessees have been included for the ITR filing. You can choose which form is relevant for you. Then you need to fill up the form by mentioning your details, your income details, your deductions as well as exemptions, and the informations related with the tax deducted at source. You need to fill up all those details for the purpose of calculating your actual tax liability. After that, acknowledgement and verification is done with the help of some OTP and your PAN account number, and then the final submission of the ITR is done at this stage, and after that the tax refund is given to the assessee after processing the income that have been submitted in the procedure of ITR filing by the assessee. So this is the e-filing income tax process, which is very easy as well as convenient and less time taking for the assessee. Now let us understand the steps that you need to follow for the purpose of e-filing. First, you need to register yourself and visit on the website of the income tax authorities, that is www.incometax.gov.in, and you need to click on the register yourself. After that, you enter your Aadhaar number or PAN card number, etc. It is necessary that you must have your PAN card with you for the purpose of filing your return. Then you need to choose e-filing method. Either you are going to download it, fill it and then upload the form, or you need to directly fill the form online. You can choose any of the method. Then you need to select the ITR form. So appropriate form must be selected by you by categorizing yourself as a different type of assessee as given in the act. So ITR 1, 2, 3, 4, in whichever category do you fall, you need to select the form. Then you need to fill the form, you need to provide all the required information asked in the form, and then you need to upload or submit the form. So you can upload if you have filled the form offline, or you can submit it directly if you have filled the form online. Finally, you need to verify. You will receive an OTP via the registered email ID or mobile number to verify your income tax return with the help of the incometax.gov.in. Now, there are some common mistakes that you need to avoid at the time of ITR filing. That is, you need to have your correct PAN number with you for filing your return. So, you need to ensure that you have your correct PAN number with you to avoid any kind of mistakes or delays in the ITR filing procedure. You need to have your correct records or details of the various sources of income. So you need not to overstate your income at the times of e-filing of your return. Exact income must be reported at the time of return filing for the purpose of assessing the correct tax burden. And you need not to miss any deduction. That means whatever deductions you can claim, such as if you have made any contribution under the section 80C in LIC policy, in PPF account, in NSC trust, in NSC certificates, then if you have sufficient documentary evidences, you must claim that deduction, as well as the other deductions are also available. So if you are contributing in any of the expenses, or you have any contribution in any scheme of the government that allows you tax deduction, that must be reported at the time of ITR filing. So accurately eligible deductions must be reported to know or inquire the exact tax liability of the assessee. Now, the time limit have been also defined in the ITR filing. We had discussed this. So, let us understand what are the penalties for late ITR filing. If your income level is less than 5 lakh rupees, in such cases, filing must be done on the due date, that is on the July 31st. If you file your income after 31st July, then the penalty is rupees 1000. If your income is more than 5 lakh rupees and you are filing your return after July 31st, then penalty is 5,000. And if in any case you are filing after 31st December of the assessment year, you may not be allowed for filing the return unless it is an updated return of the assessee. So these are the various penalties for late filing. Now let us understand Why is income tax filing important for the personal finance? In the personal financial management, how the ITR filing can help you to maximize your saving, to make you more financially strong. So by filing your ITR, you can very easily avoid the legal complexities, as well as you can save more and you can invest more into the market. So the first benefit of the ITR filing for personal finances, it helps to track the income and expenditure of the assessee. So all the incomes sources are clearly mentioned, and with the help of a clear estimate of the income and expenditure, you can prepare your budget and you can plan your finances very well. It helps in the tax saving. So by claiming various deductions such as ATC, ATD or 24B for a house loan, you can reduce your taxable income and you can increase your savings. It makes you more financially credible in the eyes of the government authorities. So it is a crucial document for taking loans from the banking authorities, for getting approval on the visas, or for getting a rented property for your residential and commercial purpose. So there are many advantages of being financially credible in the eyes of the society. It also enables the refund, excess, TDS if you have deposited, it will be then reported and your refund will be given to you. It also allows the carry forward of losses. If you file your ITR, then if you are facing any business losses, either long-term capital loss or short-term capital loss or business loss, all these loss can be carry forward and set off against the future profits of the business organization. So it helps to save the taxes in the future period also, and it helps to avoid the penalties. So late filing always comes with the penalties that we have discussed. So fines and missed refund opportunities, these will be the result of not filing your returns at the due time. So you can avoid these mistakes and you can file your returns at time for the purpose of having the maximum advantage in the personal financial management. So filing your return basically equals to gaining of the control of your finances. So basically it reflects the discipline, opens up many financial opportunities and helps you to stay tax efficient. So with this we come to an end of this lecture. Thank you.